Now known as the most powerful woman in American finance, Mary Callahan Erdos is CEO of the Assets and Wealth Management Division at J.P.Morgan, grew its assets under management, or how much money the bank manages for its customers, from $1.7 trillion to over $5 trillion. In the next few minutes, I'll reveal why she thinks the perfect portfolio is a myth, what investments you should look for and what you should avoid, the key mistake people make in investing, and her best strategy for handling market volatility. Have you ever asked, what's the perfect portfolio out there? What do I invest in and how much do I put in each investment? Her answer, the perfect portfolio is a myth. What is perfect for you won't be perfect for someone else because you guys do not share the same circumstances. As a very basic example, your grandpa will have more money invested in stable investments than you will because he can't handle another crash. So there is no one-size-fits-all approach. Just like how you probably can't fit into your kid's clothes unless you're Kevin Hart, the same applies here. Although the perfect portfolio doesn't exist, she believes that there are general guidelines you should follow. 1. When you're investing, you should look for long-term growth options. 2. Any money you don't need should be invested. 3. Don't take money out unless you really need it. On the other hand, there is also something you must avoid. Let's say your friend or whoever comes to you and tells you about this really popular investment that you should buy, but you have no clue what it actually is. When you ask him to explain it, he can't break it down into simple English. What should you do? Erdo says you should never invest in something that you don't understand. If you don't understand it, it's not a good investment, regardless of how much it can make. Okay, let's say you're following all of these rules. You think you're set, right? Wrong. Erdo says there's a dangerous habit you need to be aware of. If you're unaware, it could screw you up big time. How many times have you seen someone who starts out with a really solid plan, but as the markets change, they make the mistake of messing with it? When the stock market falls, they try to cut their losses and sell, and when a random stock blows up, like what happened with GameStop a while back, they jump on the bandwagon. Erdo says that these are very deadly mistakes, and you will end up losing money more times than not. Instead, you need to stick to your plan, regardless of what the market does. She believes that as long as you have a well-diversified portfolio, it will capture the tail risk or risks that can bring great rewards and ensure long-term financial success. If you're finding this video helpful so far, make sure to subscribe down below. Similarly, you deal with volatility by staying invested during times of uncertainty and fear. Those are the times when investors can get exceptional returns. She believes that it's one of the most important things to do and also one of the hardest things to do, just like listening to your girlfriend. If you have trouble staying invested when the markets crash or you want a portfolio recommendation from a billionaire investor, this next video will reveal Ray Dalio's all-season portfolio. With it, you can get most of the market gains with a lot less risk.